You must be excited right about now. All that cash that just hit your bank account, this is exciting. Maybe you use that fancy new tax software or contact an accountant, and it's finally here your cash tax refund just hit your bank account. But what do you do with it once it's deposited? You buy that new iPhone, you buy new shoes, go out for maybe a fancy dinner. The options are seemingly endless. Did you know that the average tax refund, according to Stats Canada, is over $2,000? That is a lot of money. That's why today I'm going to talk about the best ways to use your tax refund. Not just the best ways, but the best ways that make the most use out of your newfound cash. First, you should consider setting up an emergency fund if you haven't already. This can help you prepare for any unexpected expenses or emergencies. The starting point for any budget is the emergency fund. In my opinion, having an emergency fund is even more important than paying off debt if you have to choose between the two. Because once you have a fully funded emergency fund, it acts as a safeguard, it acts as a shield from interest. Because instead of going to your credit cards or for a line of credit and racking up interest to pay for unexpected expenses or unexpected emergencies, because you have money set aside for exactly this purpose. And I'm just weary of interest. I don't like paying interest at all. I'd rather stay away from interest as much as possible. For me, the emergency fund is a go-to for any use cases for those unexpected expenses, rather than going to a credit card. While there are many ways to building an emergency fund, one of which is, for example, getting a side hustle. Any money or income you earn from a side hustle can go towards first setting up that emergency fund. But you can fast track this whole process with your tax refund. One huge trick on making this emergency fund work for you is to keep it completely separate from your other buckets of savings. For example, you keep it away and separate from your checking account so you don't actually spend it. You should also keep it separate from your normal savings account so that emergency fund is there when you need it the most. Because a savings account is not an emergency fund. The whole point of this money is to be able to use it in an emergency. That means you need quick access to these funds. If you have this money sitting in that new cash.to ETF earning interest, it may not give you the quickest liquidity when you need this money the most. You can invest it. You can invest your tax refund into a TFSA. A tax-free savings account is a tax-advantaged investing account that can help you earn money tax-free. You can think of the TFSA like a basket where you can hold qualified investments and earn income from those investments, such as interest, such as capital gains, such as dividends, all tax-free. The money you contribute to your TFSA comes from income after you've already paid your income taxes. And the main benefit of a TFSA is that your contributions and the earnings on those contributions, they both grow tax-free. This can help you save for a vacation, for a new home, for a new car, for retirement. Whatever your goal is, the TFSA will help you build your wealth over time. And the beauty of it all is that this wealth is all being grown tax-free, as long as your money stays within the TFSA. The other option with your tax refund is that you can put it inside an RRSP. The Registered Retirement Savings Plan is calculated by taking 18% of your earned income up to a maximum for 2023. The maximum is $30,780. That means you can put away nearly $31,000 into your RRSP, and part of it can be funded by a tax refund. And the main benefit of the RRSP is whatever contributions you put inside is a tax deduction that'll help you either lower your taxes that you have to pay or give you a bigger refund when it comes to filing taxes. Now, the money that you can put inside an RRSP is adjusted if you also have a company-sponsored pension plan that you're also contributing to. A recent survey showed that a full 52% of Canadians did not plan on contributing to the RRSP this year. And they get it, it's harder and harder to put money away for retirement or for savings because of inflation, cost of living, expenses keep on piling up, and income probably hasn't moved all that much. And even if it does move, you take such a big hit on taxes that there's not much left over to pay for all of life expenses, for HSE, for a whole host of other expenses. But putting away anything at all into your RRSP is better than putting nothing away at all. Because a journey of 1,000 miles always starts with that one step. So even if you can put away $10 a week, maybe you put away $100 a month, whatever that amount is, just contribute consistently. It's these small habits that make a huge difference over a long time. And if it's too much of a hassle to remember to put money away every time you get paid into RSP or into another savings bucket, automate your savings. It's one of the easiest ways, so that way you never have to think about it ever again. The money goes from your paycheck to your savings account, and that's it. It's taken care of for you. And the earnings on your investments from your RSP, so once that money goes to your paycheck, that paycheck funds your RSP and you invest it, those earnings will continue to compound tax-free as long as the money stays within the RSP bucket. And the really cool thing is that if you use your tax refund and put it into your RSP, this will help you get another large refund next year. And it becomes this cycle, this flywheel, where every time you put money into your RSP, you get a tax refund. That tax refund goes back into your RSP. It creates a large refund the following year. And the cycle will continue as long as you make this a habit. As we just talked about, that you can use your tax refund and you can put it to your TFSA. You can put it to your RSP. The other option that you can use with your tax refund is to invest in your child's RESP, the Registered Education Savings Plan. And this is a great way to invest in your child's future. The average undergrad tuition fee is close to $7,000 according to Stats Canada. That's for 1 year out of a 4-year program. And that cost doesn't include the cost of living. It doesn't include cost of getting textbooks. It doesn't include any other cost. It's just the pure tuition costs. Those expenses can add tens of thousands of dollars on top of the tuition costs. When I went to Brock University in St. Catharines, Ontario, I spent nearly $40,000 on the 4-year program. And if your kids are young, you also need to account for rising living costs, because the cost of going to school today is going to be much more than the cost of going to school 5 years from now, 10 years from now, whenever your kids are ready. An RESP is a perfect savings tool for your kids' education. For every $1 you put into an RESP, the Canada Education Savings Grant adds an extra 20 cents. That's extra $500 per year if you're contributing the maximum $2,500 per year up until your child turns 17. Now, as I've been talking about investing your tax refund into your TFSA, into your RRSP, or even into your kid's RESP plan, you'll be thinking, well, where do you go to open one of these accounts? My preferred choice is that if you're just starting out and you need something that's basic and just easy to use, then go with Wealthsimple. Super easy to use, very clean user interface, and you can pick it up relatively quickly. Now, if you want something with more bells and whistles, something that's more featured focused, then I would recommend trying out Interactive Brokers. Also very easy to use. It's very quick to get your account up and running. I will leave links to both Wealthsimple and Interactive Brokers in the description of this video and the comment section, so you can get started right away after you finish watching this video. Pay off debt. You can use your tax refund to help you pay off your credit card debt. You can also even consider consolidating your debts to make your payments go even further. This will help you over the long run save on interest and help improve your credit score potentially. According to the Bank of Canada, nearly 89% of Canadians have at least one credit card, and 70% of Canadians pay off their balance in full each and every month. That means there's nearly 30% of us that are not paying off their balance in full, and are paying an average interest rate of nearly 19% on those outstanding credit card balances. That's very expensive. I don't know about you, but sometimes if you look at your credit card statement, depending on which credit card you have, it'll actually outline that if you make the minimum payment, how long it'll take you to pay off that balance. I was looking at my credit card the other day, and it said something like, if you make the minimum payment, which was like, I don't know, $10, $15, it's going to take me 15 years to pay off that credit card bill. So you do want to avoid that interest rate as much as possible. It's super expensive. Paying off or paying down expensive credit card debt that's high interest is a super smart move, because once you free up that debt, that cash can be used to boost your retirement savings or go toward other buckets, but that cash is not freed up for you to make even more use out of it once you pay off your debt. So far, we've talked about how you can use your tax refund for an emergency fund. How you can use it to invest in your TFSA, your RSP, your RESP. You can use it to pay off credit card debt. But you can also use that tax refund to have some fun. If you use all of your tax refund on the things you are supposed to do and not have any fun along the way, well, what's the point? Now, this may go against the grain or sound unconventional, but it is okay to use that cash, to use part of that tax refund to save for something fun like a family vacation. It can help create a beautiful lifetime full of memories. And as an example, let's say if you were to invest your tax refund and you get dividends, it may give you more money at the end of the day. But if you invested in a family vacation, what it does, it gives you experience dividends. Because every time you think back to that family vacation or that experience, I don't know about you, but it puts a smile on my face when I think about my last family vacation, how much fun I had just spending time with the family. That's a memory dividend. It may not, you can't use that memory dividend to pay for things like you can with, cash dividends, but still, that memory dividend is worth something. The world is a big, beautiful, and often surprising place, and it's never been easier to travel to see more of the world and experience life itself. Now, to put the personal finance spin back onto having some fun with money, if you want to experience international travel and keep it within your budget of your tax refund, start reading up on international travel hacks and tips. It'll help to stretch your budget even further. Sometimes being responsible is all we do. If you're one of those people that always seems to be doing the right thing, that's not a bad thing. But if you're the type that's always saving money, always making sure your bills are being paid on time, paying off debt, saying no when you really want to say yes, maybe it's a time you do something nice for yourself and you treat yourself. Buy yourself a new outfit, get your hair done, go golfing, buy your new shoes, buy that new gadget. Whatever it is, don't forget to be nice to yourself and treat yourself. Spoiling yourself sometimes is the best course of action, especially if it's not something that you're accustomed to. Alternatively, you can also treat someone else to something special. As soon as you file your tax return and have an estimate of the amount you're going to receive, you can start thinking of ways to make use of that extra cash. Now, you may not be a fan of budgeting, but at least you want to have a general sense of your immediate priorities to make sure you are financially covered. As you can see from this video, there are many fun and smart ways to make use of that newfound cash. But what's the sequence of events that makes the most sense for you? Meaning, how should you prioritize on how you use your tax refund? Let's talk about that for a quick second. Here's a checklist on the questions you can ask yourself that will give you an idea on how to allocate your tax refund into all the various buckets we talked about. What debts do you owe? Are there any high interest debts? Are you behind on paying any bills? What important purchases have you been putting off? For example, clothes for your kids, health or dental checkups, car or appliance repairs. What expenses do you have coming up over the next few months? Think of birthdays, think of vacations, think of Christmas or other holidays. Do you have an emergency fund set up? Is it fully funded yet? These are just some talking points and some ideas that will help you prioritize on the best ways to make use of your tax refund that makes the most sense for you. The point of this exercise is to have you think in advance on how you should allocate your tax refund, how much needs to go towards something fun, and how much needs to go towards your financial needs. Don't blow your tax refund on something completely unnecessary, and don't blow it on an impulsive splurge. You may already have the funds earmarked for some spending. Don't let your tax refund burn a hole in your pocket. Remember this, the government isn't giving you a bonus check and it's called a tax refund. The government is giving you back your money and it belongs to you all from the start. It is your money, you're just getting it back from the government. And if you're going to take away anything from this video, let it be this. No matter where your money comes from, give it a purpose. Hopefully you found this video helpful. You found some new smart ways to make the most use out of your tax refund. If you liked it, make sure you give it a thumbs up, subscribe to the channel if you haven't already, and be sure to hit that thanks button to support this channel. And don't forget, last but not least, to share this video with your friends who may be in a similar situation when it comes to their taxes. I also have unique offers for you, some amazing discounts and sign-up bonuses for you in the description of this video. So go check them out. You may find some helpful products and services. These are things that I use on a daily basis, and you can check them out if you like. That's it for now. I'll talk to you in the comment section.